Well, good day, all. Ira Epstein, and what an interesting day for this Thursday, the 17th of October, 2024, and this is your financial market news wrap-up. We saw the European Central Bank today cut their interest rate by a quarter point. They're probably going another quarter at the next meeting after this. And if you saw yesterday, I had up a 5-minute show on my website for a bit for you there, and you were able to see what I'm thinking is going to happen with all the banks, the major ones that I was talking about, the Bank of England, Canada, then European Central Bank, which kicked off the parade, and then the dollar, Federal Reserve. And I think we're all going to see quarter point cuts. So look for that to be the day. We saw the head of Hamas was chopped off today. We'll probably see his brother, that's the word, maybe take his place. But maybe we get lucky and nobody takes his place. And maybe Hamas starts going away. The U.S. is pressing very hard on Israel to let trucks into Israel, and Israel's balking at it. They're making it almost impossible. The starvation process is going on, and the idea here is to root out Hamas. I fully believe that that's what's going on, and Israel hasn't attacked Iran, so it's hard. The U.S. will press, but people can't live without food for 30 days, so something's got to give somewhere along the line here. We will see. The U.S. sent its B-2 Spirit bomber, you know which one that is. That's that beautiful-looking airship. And I guess that they flew about, I don't know how many thousands of nautical miles from the United States, and they launched those bombs that can go deep into the ground, that penetrate. And supposedly they blew up 5 bunkers of munitions in Yemen. I'm guessing that message was for Iran, that be careful of what you do, we can take out blah, blah, blah. I'm sure Israel wishes it had that weapon. I don't know that it doesn't, but it's one heck of a weapon. I'm sure we'll hear more about it tomorrow, and if it was successful or not. As for everything else that is going on, the retail person is out there and they're buying. If you looked at retail sales today, they were strong. They propelled the stock market up again. Gold is going up because gold's understanding, I think, more and more that inflation, you'll get it down, but it's going to come back. Even the ECB president said that. And the reason is, once you start lowering these interest rates to spur on the economy, that enemy, inflation, well, people have more money, the economy spurs on, inflation gradually comes back into play. It's very tricky to get rid of it. So you have to keep your eyes on that. And it's interesting that the euro, it did go down about 40, 45 points, and it's under the 109 level, but it's not in a state of collapse. It's interesting, too, that bonds and notes peaked where they did, and you'll see what I'm talking about in a minute. They went up to some resistance points and had some problems with it. Energy markets are very, very stable at this point. So in the S&P, if we were to finish right now, and trading were over, you're at a new all-time high close of 58,950. And today, for the first time, I started hearing firms come out on CNBC with new objectives of 6,200. Now, remember, we started the year 5,200 objective, 54, 56, 58. We're through it. Then we went to 6. Now, for the first time, I'm hearing course. 6,200. You know, at some point the parade will end because you're going to get away from the PE ratios are going to get up to, 23, 24, 25 on overall, and that's a pretty high number to support. But we're in earnings season. Netflix did a great job. They added a lot of subscribers. The numbers were positive. We'll see what happens. So the market feels good about things. When we look at the S&P and the Ds, you can see the market's suddenly gotten very quiet overall in here. This is the bar chart of actual prices, whereas the first chart was just closes. Still in an uptrend. If you take out this right over here, the 5750 area, you got to be a little nervous. You can come down back. That's not even 5750. What is that number? Let's get to it. I'd like to know exactly where it's at with you. That number is 5850. If you take that out, there'd be your first warning sign that maybe on this run, you're going to pull back a little bit and maybe go back to the 18-day average to regroup. You don't have to. What the market's doing is it's running the upper Bollinger Band. It's hitting it and not accelerating against it. It's pushing it higher. When that happens and you keep hitting it like that, we call that the gorilla glue trade. The market doesn't get away. And what it does to momentum, is it makes the momentum get from overbought to embedding. And when a momentum embeds, the nature of the market is you're buying the breaks in the market at that point, and you'll abandon ship if the red line closes under 79. And until that happens, it's a trade where on the breaks, the trade keeps buying, and they keep selling into that Bollinger Band. And it's not a huge trade in this instance. Sometimes it can be. The scale, I'm not throwing it off. That is the right scale, but that's what I think is going on. You have not done that in the NASDAQ. The NASDAQ was an overbought and is an overbought market, not participating with the S&P. The Dow is now being pulled along the same way. Every day, you're hitting the Bollinger Bands. You see that? And as that's happening, you're moving this number up till you got to get them where they're both over the 80 level for a certain period of time. At the end of this, I'll be running my ad on Bollinger Bands. If you haven't taken the Bollinger Band course, do so. It will stick with you. And you learn another technique, another way to look at the market. Most people just look at it as resistance. No, it's much more than that. All right, so as I'm looking at it, the trend is still in fine steed right here, uptrend, new all-time highs. In the micro Russell, nah, just overbought, not embedding at this point. We then step over to the notes. As we were coming up and you lost, and I'll show you this. We were talking this together just yesterday. Let me come over. There we go. You had a number get over 20. 21 is where you lose the embedded reading. The objective would be the closest moving average if you lose it, and you're right on the closest moving average. And this was yesterday. Today, this is just what I'd expect. You fell back, you kept the embedded reading, and that's where you're at right now. So you've got to learn to play with these numbers. I teach you that strategy as you're in there. The 5-year trying to do the same thing. If we back up here, we see. And I was explaining to you, the back end is doing one thing, back end being the 30, the 10-year. The 5 and the 2s are doing something very different, and that's the curve yield at work. But you can see right here, you lost the bearish reading. So the market now, because you're right at it, is playing back and forth on that number. It re-embedded today. The only time you can re-embed on one day is the day after if both numbers get back underneath the 20 level. And my formula for stochastics is different than yours. When you take the course, I give you my formula, which is different than yours. And so you'll know, I did run this all by George Lane, who developed this slow stochastic formula, showed him the things when he was alive, what I was coming up with, and all he ever said is, I find it very interesting. And away you are with that. So I'm looking at how this market is just working there. It is still bearish, which means interest rates are what? They're still climbing on you. Because when you go down in futures, you're going up elsewhere. That's adding power to the dollar on a relative basis. Because the markets are now wondering, with all the good data that we're still getting, the consumer strong and so on, does the U.S., does the Federal Reserve, what are they going to do come November 7th? They don't have to cut. They can pause. We will see. That's going to become a theme, especially if you get strong job numbers. They don't have to cut. They can go into a pause. They just did a 50 basis point. Euro, this was the break that you got. Notice the embedded reading and notice what happens when you get that. The market stays under the selling pressure gun. British pound, embedded reading. I wouldn't be surprised if we challenge the 129.62 area. To get me out of my bearish mode, you've got to get the red line to close over 21. Again, I'm going to show that you Bollinger Bands after this and why you should get yourself involved in that. Here's a classic case. Take the name off the chart. You're at the upper band. You don't want to be long. You fall down, you don't want to be short when you hit the band. You're going up, you don't want to buy it up here against the band. The odds are it's going to slip back on you. In crude oil, we got up to the resistance point of the 200, the 100, and the Bollinger Band. And what I said to you, and the tapes are right there. I said, no, I can't imagine that you want to be a buyer up here with that. That is big-time resistance. No, I didn't get a sell signal. But knowing not to be long is as good as being short to me. And you're in a bear trend right now. Same thing happened in WTI, identical pattern. Heating oil. Now, I don't think heating oil is going to drop down here. It could. I'm certainly not buying it to find out if it does or doesn't, or selling it here. But where would you put a stop if you want to be short now? Over the most current high? That's too much risk to get down to that number. I'll let somebody else want to trade, and you'll hear me say that often. Gorilla Glue trade. You latched on in natural gas right here. Do you remember up here I was telling you in this and in UNG on the ETF videos, I said, I think you're making a major top. I'm going to stay with what I told you at that point. That was the case. Probably a great place if you're an options trader, which I'm not. If you're an options trader, sometimes you go in and you buy a put up there, because nobody wants them at that point. You're in a bull market. Interesting ideas. I'll let you be the options guy. But again, I said, learn the Bollinger Bands. Take a look at this. It's on our website, iraepstein.com, under the word courses. Couldn't be easier for you. Take a look. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.